Did you know that Egypt, Nigeria, South Africa, Kenya, and Angola are keeping their interest rates high until the second half of 2024? There's a strategy to this financial maneuver. These African powerhouses are battling inflation, weighing risks, and dealing with geopolitical tensions. With a keen eye on the global economy, these nations are playing a high-stakes game. They're making calculated moves, much like in a chess match. So it's safe to say it's like a financial chess match, isn't it? Did you hear about the Houthi militants causing trouble in the Bab El-Mandeb strait? This narrow choke point between the Red Sea and the Gulf of Aden is a critical route for global trade. Now, with ships being forced to reroute, we're seeing a significant spike in freight costs. And with more than a tenth of worldwide trade potentially affected, the repercussions could be felt far and wide, from the heart of Africa to the farthest corners of the globe. Talk about a ripple effect. Ghana and Mozambique might loosen up in the first half of 2024. Intrigued? Both nations are grappling with some of the world's highest real interest rates. But here's the twist. There's chatter about new taxes on the horizon which could stir up the inflation pot. It's a delicate balancing act, a game of financial Jenga, if you will. Will these smaller economies take the plunge and shake things up? Or will they play it safe and hold off? Decisions. Decisions indeed. What do the experts have to say about all this? Well, Ivan Mahango from Bloomberg Economics sees persistent inflation and currency issues keeping rates steady. South Africa's governor Lesetja Kganyago believes rate cuts will only occur when inflation hits that elusive sweet spot. And what about the US? Oxford Economics expects rate cuts to follow the US Federal Reserve's lead. Quite a blend of predictions, right? Only time will tell if these predictions hold true. Nigeria's central bank is keeping us on our toes. There's been a peculiar silence with no meetings held since July. Analysts are buzzing with speculation. The consensus? An impending jumbo rate increase to combat stubborn inflation. The culprit? A potent cocktail of oil price flux, fiscal deficits, and currency pressure. But, with a new governor at the helm of Nigeria's monetary policy, we could be in for a surprise. After all, a new governor in town means it's time to make a statement. From Ghana's 23.2% to Egypt's eye-popping 33.7%, inflation is a hot topic. The numbers are staggering, and they're causing central banks to scramble. It's a delicate game of balance. On the one hand, they need to keep the economy stimulated. On the other, they need to prevent the value of their currency from plummeting. It's a high-stakes financial dance, and the world is watching. Keep following G's Finance for your daily financial news. Until next time, stay financially savvy.